Hi, I'm Keith McCullough, and welcome back to Real Conversations with Mario Gabelli. You know what we're talking about. We're talking about his best ideas, best stock picks. Buying the damn dip today might make some. We actually have a dip today. You know, are you a dip buyer? You've been a dip buyer. You're into that, right?
No. Well, what we do is not complicated. What's a company worth in 3 or 4 years? Okay, we have a high passion for companies, but we also have a high retention rate, so our turnover is very low. So if we think a company is going to be trading at $24 today because it's worth $35 in 3 years, and I can buy it at $22, I have lower risk and a higher margin of safety. So we look for those slots. You know, and in addition to that, while there's been low volatility, Keith,
super low,
but individual companies have had high volatility. Okay, so today Harris Corp is up $10. Wins was down $25 in the last 2 days. So we look for those spots. And in addition to that, when you're running $40 billion all equities, and I run a portion of that, you always have some extra cash that you want to buy stuff.
So you're agnostic on what the quote-unquote market multiple is. I definitely am, by the way. So just getting that on the shelf. I mean, you're just looking for companies that you can buy at the right price for 3 years.
Or whatever time period. The reason we want to have an extended time period is whether we want to pay a tax. Tax-free accounts get the same thought process.
Right.
The tax rate is 23.8% if you live in Florida, and not in Connecticut or anywhere else. So, if you hold it over a year, so that's important to us because it's not only what you make, it's what you keep. In addition to that, it takes a while for some of these companies where you may have a new management in, or a new CEO, or a new strategy, for that to work out. It doesn't happen instantly, like Flannery at GE or some of these companies.
Okay, so I'll ask you about that a little later on, like new management teams that you like, stuff of that nature, themes. But first, just giving you an open rein here on what some of your top ideas are.
Well, they're nothing new. They're a continuation of a policy or philosophy. For example, housing. Okay, we'll do 1.3 million single-family homes. Would be an average for the last 30 years. Obviously, when Wall Street was writing these low doc, no doc, and all those other things, you basically got up to 1.6, 1.7. Right now, they're running at 900,000, a million homes. So I think there's a long runway here because the population's increased. And as a result of that, that whole ecosystem, who benefits from housing, which part in the initial phase, and what happens later, and then how does manufacturing housing fit into that? So that's an example. Another example would be a simple thing. I think tonight, today is Tuesday, the president will be talking at 9 o'clock. You got an infrastructure play. Right. Okay, you just drive on there's 500,000 bridges in the United States. The American Society of Civil Engineers has rated them, upgraded them to a D+. And so what does that mean, Keith? It means that we need a lot of help, okay? And roads, inland waterways, avionics, the whole notion of how do we participate. Now, we got an early sampling of that. We got an early sampling in December of 2015 when they had the Fix America Surface Transportation, called the FAST Act, which helped give money to companies to go in and do the milling and the paving of roads. And therefore, we found companies like in Chattanooga, a company called Ashtec. They make great equipment that you'll see for laying down asphalt and cutting up the roads. And then we found one in Orlando, Florida. They had more cash than debt, called Gencor. Now we've added to that. Even John Deere just bought a company called Gherkin. They closed on it in December for about $5.3 billion. The largest acquisition, does the milling, the paving, and so on, and working. And as a result of that ecosystem, how do we participate? What about equipment rental companies? Right here in Stamford, there's a company called United Rentals. We've been looking at that for a long time. There's a company in London that I've been visiting called Ashted. There's a company down in, I think it's Bonita Springs, Florida, called Herc Rentals. So that area is intriguing, even without an extra tailwind from an infrastructure spend, and they're attractive, and they have been, and they will continue to be. In addition to that, you have 100% depreciation on equipment put in place, new and used. Yeah. Okay, so effective September 27th of last year, you go out and buy an aircraft. You can buy a G550. I may be lucky to get a King Air. But basically, you go out and you buy one of these things, and you take a write-off. And I think demand has been picking up in the last 3 or 4 weeks. Inquiries have increased. And as a result of that, companies that make this equipment are intriguing. The wild card here is that Boeing is trying to buy Embraer. So infrastructure in a lot of different ways. And the 100% depreciation coming in also helps the equipment companies. And then there are companies in that regard, even the big Class 8 truck manufacturers in the United States, the Packard. So there's a whole bunch. And then we're looking at things like health and wellness, okay? You really have to ask yourself, how do we cut down on healthcare costs? Now, you saw today Bezos, Buffett, and Diamond are coming in and doing something. They're putting together some kind of a venture, and I'm not sure I know the details yet, of how to focus on healthcare costs, whether it's generic drugs or distribution. How do we get cost into better containment? And we've liked that, but we like to also go to have behavior changes, less smoking or drinking, no. Things like that. And sugar, we like to get substitutes for sugar, so we found beverages that have no ingredients of any kind, either artificial or otherwise. Mm-hmm. And so you go into a Costco and you look on the shelves and see who's making sparkling water and things like that. Then the other areas, what Gen Z is doing. What does Gen and the millennials want to do? Do they want esports, e-games? Do they like live entertainment? And we're in a camp that says if I can buy live entertainment, I like it. So I see Derek Jeter buying the Marlins for $1.4 billion or $3 billion. And so when I can buy a baseball team like the Atlanta Braves, BATRA, there's a symbol where John Malone is in charge. Ooh. And they got a BATRK, but the A is the voting, and I always like to have voting when I pay the same price. And as a result of that, that is interesting. The Atlanta Braves are selling around 22, 3, 4, something like that. There's 58 million shares. You multiply that out, and you get SunTrust Stadium. You own the ballpark. You own the land around it, which is a development. Really? Yeah, it's a lot of land down in Cobb County in Atlanta. They moved from downtown. The attendance has gone up. The team did better, but it's got a long way to go. Mm-hmm. And when you think about it, the Braves, I think, started in 1871. Mm-hmm. Somewhere else, though.
But they own the entire entertainment venue. It's not just the Braves. Wow.
Yes, except one thing. On the they did sign a television deal that probably extends to 2027. I'm cuffing that date. It could be 28. Mm-hmm. So that's work in progress.
It's interesting because this is right up your alley. MSG's been I don't know if you own it anymore, but that's a name that you.
Yeah, there's 23.5 million shares of MSG. The stock is $212 today. Okay, so you multiply that out. So let's call it 23 million shares times 200 is 4.6 billion. Let's call it 4.8 billion rounded up in equity. You got $1.1 billion of cash. Then you get the Knicks, the Rangers. Then you get all the venues. And then you get some other things like they threw in, like Tau. And you also get air rights in Manhattan over the Garden. And that area west of the Garden in the Hudson Yards is a hot area. Mm-hmm. Okay, it's as good as Nashville. It's as good as other parts like Reno. And that has economic value. And Jimmy Dolan, I think, at some point will say, okay, let's split the company up. Mm-hmm. Again, remember, Cablevision split MSG. They split AMC, Walking Dead, and they then... MSG split MSGN. And once you have that in your DNA of understanding how financial engineering works, it's easy to do the next one. The next one, hopefully, is take live entertainment. They're building something in Las Vegas. They're going to be in esports, e-gaming at some point. And that's kind of intriguing to me.
Mm-hmm. A lot of these things are. This is kind of right up your alley. I think one of your better quotes is when you talk about bargains. Marty Whitman used to say that a bargain that remains a bargain is no bargain. But the way that you define bargains is smaller companies that are ignored and unloved.
Yeah, but the problem is that the number of sell-side analysts that covering tiny companies is declining. Mm-hmm. Okay, they're on the buy side, but it's when they have the intention and focus. I can't talk to my analyst. Mm-hmm. Okay,
because they're on the sell side.
Yeah, we have a bunch on the buy side. So their opinions are their opinions. Mm-hmm. So sometimes somebody said, well, your analyst is saying X and I'm saying Y. Yeah, I happen to believe that MSG at $212 is okay. Mm-hmm. It's not as easy to predict that they will sell it the way you can do at Malone, who will harvest it to some rich guy that wants to own a baseball team or gal, and they'll pay enough to get the whole venue.
Have you ever lost money being long John Malone?
Yeah, I think he's made a mistake back in 1999. I think he bought something called Jukebox in South Beach, Florida. It was a way to get music way before you had Spotify, way before you had Sirius, way before you had Pandora. And there was a way for you to listen to any music you wanted at any time.
Yeah, wow.
However,
He actually did make a mistake. But back on BTRA, you said the A stock has the vote. Is the voting stock?
Yeah.
Okay.
You know what? Going back like in housing, when you can buy the voting stock and buy it at the same price as the low vote, in the case of Lennar, which is located in Miami, Miller is running it. Stewart has done a good job. The voting stock is selling at a 12-point discount from the low vote. So LEN, which is in the index, versus LEN.B, which is the voting stock where the family has their controlling interest, you're buying it at a $12 discount. We now own 11 to 12% of the B. There's a couple of 100 million shares of the A and 38 million shares of the B, so we like to have our money. So we did that with Viacom. In the case of Greif, we're getting a premium now. We bought it at a discount. It's now going to a premium. And we like the underlying asset, so we get a double win.
Awesome. That's great. So, I mean, a lot of...
You can't do it in MSG because the voting stock's held by the Dolan family.
But a lot of your rules within the rules, I mean, they're great playbook rules for investing. So, I mean, whether it's betting on Malone, but who is the best new management team that you're long right now? Or change in management, however you want to
Well, that's work in process, okay? Now, you take a system. What we like on a global basis is wireless.
Okay.
And we like communications. Secondly, what we think is Latin America is going to come back with Mauricio Macri in Argentina. Chile's always done well. Now, he grew up in Colombia, but he runs a company called Millicom. Millicom is controlled by a company in Stockholm called Kinnevik, Kinn, and the woman that runs it, Christine Stenbeck, is a family member for decades. Malone wants to take control of Latin America the way he's done in Europe and the way he's done in the United States in cable. So he's going to take a spinoff called Lilac, Liberty International Latin America, and somehow figure a way to merge it with, and they bought cable and wireless, they're going to merge it with Millicom. So Millicom is a $70 stock with 100 million shares, $7 billion market cap, a couple of billion of debt. They're selling off their assets in Africa. So we like that. So we like the notion of dealing in the wireless world. And there are other ways to participate that on a global basis, but knowing that John Malone, who's is the architect behind it.
Yeah, that's a great idea. And the other one that we definitely are big believers in is this Capex cycle. We meet with a lot of people who have no idea how to answer the question other than it's up. Like if you give me an LLC 100% depreciation against my net income, my goal is to not pay taxes, so I'm going to invest in my business. It's a pretty simple one. 94% of U.S. companies, as you know, are pass-through entities, so people are incentivized to avoid taxes if they can invest in their business. How do you get some tangible level of confidence in Capex just going straight up into the right, or a level of it, or do you care? You just want to be
well. We do it another way, Kate. When I look at the global economy, it's $84 trillion. I look at the U.S. as $24 trillion. We are a growth engine. So I start off and break the U.S. economy down into the big pieces. The consumer is 70%. Investment, of which Capex is a subset, is 13 or 14%. Then you have state, local, and government spending, and then you have the plus or minus in net exports. The U.S. consumer's net worth is over $100 trillion before today, over $100 trillion, okay? The numbers will be out for December 31st. They'll be gross assets probably 116 trillion, and the debt is probably 15 trillion, 15.5. There's sub-debt issues.
Yep.
Okay. The car sales are slowing down a little bit, but inventories come down a little bit, so I don't worry about it. That's on the consumer side. In the investment side, as the economy roars up to a 3% real growth and as labor supply comes down, you have to put money back into Capex. You haven't done it. In addition to that, there's the 11th commandment. If you don't ask, you don't get. What he's getting is a company saying, I'm going to relocate in the U.S. Why? Because of the less regulation and also the favorable tax rate. And as a result of that, you're going to start seeing some Capex because of new greenfield construction. In addition to that, there's new technology all the time. And to the degree you can take 100% write-off, that helps cash flow. Now, some industries get the better benefits, some don't, okay? Like I talked about used aircraft, a new aircraft. You buy I think business jets are bottomed. I think they're coming back. I think the notion of buying other equipment is important, and that will be companies which are niche companies. So we have a company called Amatec out of Philadelphia that's done extremely well. They create niches. There's a company right here in Stanford, Crane, that just reported numbers today that is involved in that.
Crane is a way to play jets?
No. Crane is a way to play.
Capex.
Capex.
Yeah.
Jets are Textron. Textron is in Providence,
that
Rhode
stock.
Island. 266 million shares, if I remember.
They make Hawkers. Yeah.
Yeah, but they also make Citations. There's a Latitude, the Longitude, but they also have a plane called the Scorpion, which they put some money in. That is also a reconnaissance plane for the military, and they're competing against the Brazilian-made aircraft. Unfortunately, if Boeing buys Embraer, gets involved, it's a tug of war as to whether they get. So that's an example of private aviation. Honeywell is another example that makes the avionics and makes other equipment. And there are companies that sell parts and spares for business jets. Mm-hmm. There's 21,000 business jets, of which about 7,000 have the fingerprints of Textron now that they bought Beach. And they own the King Air, which is a pretty efficient plane.
Yeah, that's great. I mean, it's a lot of ways to kind of apply the same thing: capex, innovation.
Yeah, but
GP
I think this notion of 100%. If I'm a doctor and I got to practice, can I buy that next X piece of equipment? Am I a dentist? Can I buy it? Am I a veterinarian for pet care? Can I buy it? Yeah. Am I a farmer? The farmer has some different rules, but the same thing. I think you see it in the construction equipment, you see it in John Deere, but you also see the Uber impact of an Uber-type mentality of having the sharing economy so that the Herc Rentals, the United Rentals all participate.
Good. All right, so we get 15 minutes to take other people's questions. The one question I didn't ask was, what do you think about pot stocks?
Plain old telephone service.
No,
POTS.
Like pot, like smoking.
Well, my pot is plain old telephone service. Your pot is smoking stuff. I don't have a point of view on your pots, but I have a point of view on mine. The only thing I am concerned about with your pot is the following. There is no question that this has been going on in Amsterdam for an extended period of time. So I look at Amsterdam and I say, do people substitute smoking pot for drinking beer? Mm-hmm. And what impact does that have on booze, beer, and wine drinking? And so far, the evidence has not been overly conclusive, okay? So that's the only way I would think about it.
But you care because you've invested in those booze stocks for a long time and made a lot of money in them.
Yeah, because I believe that, if you and I were here in 1955, that's not long ago. And I happen to know the number. There was 2.8 billion people, and now there's 7.5 billion. But 3 billion of those are India and China. And as far as I can tell, the Chinese love to gamble and they're willing to drink, and the Indians are the same way as opposed to other parts of the world. So I have a rising income in two parts of the world that at the margin are going to go. Secondly, in China, 90-odd% of what they consume and when I was there in 1981, we used to drink motais, come by, drink it down and slug it down the way I used to drink grappa, so I was okay. Independent of all of that, 90% plus is only the local beverage. Motai, it's a Baidu type drink.
Yeah.
So that as you come in with booze, whether it's Irish whiskey, which is Jameson, which is Pernod, or you come in with products that Remy Martin sell, or you even come in with bourbon, that helps the system. Secondly, they're selling up. So you can buy a bottle of wine for $50, but you can get a premium Irish whiskey for $35. And Maker's Mark and Woodford Reserve are certainly brands that I, want you to buy.
Yeah,
so I like that because there's pricing power, and there's growth, and there's a tailwind of this. So I'm totally in favor of the booze business, and that is very interesting time frame.
Yeah, for sure.
What's the question?
Some questions. MSG first. In your opinion, which of MSG's assets will be monetized first? Knicks, Rangers, air rights?
I don't have it that way. I'm thinking that at some point in time, the Dolan family will take the sports teams and put them off. They're selling the Liberty today, for whatever reason. Okay, and then the question is, will they do esports and will they do e-gaming, and will esports be dropped into that live entertainment? And then you're opening the venue in Las Vegas. So spinning off but controlling.
Okay.
That doesn't mean selling, but spinning off and controlling in two different vehicles, okay? I'm not so sure the air rights would not go. I have to re-examine the tax structure, but obviously with a 21% tax rate, even if it was full cash tax pay, that helps. And so either way, $212, you get the Knicks almost for free.
On stubs and whatnot, we have a lot of questions on Dr. Pepper, by the way. That's kind of an open
If they
question.
want it. You want it?
Do you want it? Do you care?
Yeah, Dr. Pepper, I happen to be my favorite drink, so I bought the stock. But I've owned it before. No, DDP, Diet Dr. Pepper. So I'm a DDP fan. Independent of all of that, I followed the company. They were bought. They were spun out. This is the second reiteration of that. The guy Young that's running has done a good job. So you got 180 million shares. The stock today is 120 probably. You're getting 103.75 cash. So you subtract the 120 from 103.75 to keep the number simple, 104. You're paying $16 for a stub. The stub will represent 13% of NewCo. NewCo will consist of Keurig and Dr. Pepper. They will have 13% of X equals the 3.5 billion. So you're going to have equity of $18 billion. You're going to have a debt of $18 billion. That's $36 billion market cap, of which Dr. Pepper shareholders, my clients, will own a piece, and Mondelez will own a piece, 13 or 14%. So the stub is selling at about, based on our analysis, based on the 2019 numbers, we think they'll do about $3.5 billion of EBITDA, maybe 3.3, and so it's not cheap. Okay, because it's $35 billion with debt coming down because there's not much capex in the business. But it's 10, 11 times. I think it's a nice vehicle. It's much like the 3G guys are going to be doing with Kraft Heinz when they try to go after Unilever, and that work is in process. And I think the Jakob Benckiser will do something with this vehicle. JAB will use this as a vehicle to buy other things. And on page 21 of the handout yesterday, I happen to have it here. I just know because I wanted to. I'll put this slide on your screen, and it will deal with the following. It goes across everything in the beverage area. The one area that's the fastest growing is sparkling water.
Really? Okay.
And sparkling water is a company called National Beverage, which makes LaCroix. Walk in tomorrow, go to Costco, and go to the sparkling water, see what you can get. Coca-Cola's trying to do something like that. Anyway, that's the Dr. Pepper. So we think over the next 3 to 5 years, a very interesting vehicle. Obviously, it's going to take 3 or 4 months to close the deal. And the question is, at what price do you pay for the stub?
So you got to be pretty happy with that this week.
It's a living.
Were you long Win coming into this week?
Yeah, we have 300,000 shares of Win. We own 1.7 million shares of Dr. Pepper. We own about 2.8 million shares of MGM. My bet in Barron's was Mirage. I thought Mirage had some things going on it. Win is a challenge. I mean, you have the biggest issue is Massachusetts, where they are not operational yet, and the question is, in quote, suitability, and then you have Las Vegas, but they're already a license holder, and there's the burden of proof on this issue is up to the state, whereas in Massachusetts it's up to the individual.
Right.
And so I think the logical, Jim Murren would love to own the asset. He's already in Springfield. He's already in Massachusetts. Massachusetts is Sheldon.
That'd be a layup.
Sheldon would love it.
And that's the way to play all of them, really. I mean, if you just keep buying the other stocks, if they get these handouts. Why not?
Well, I have
at
certain prices, there are certain dynamics that take place. So Cotter still owns a piece with Universal Entertainment. He's got 100 million, 10 million of the 100 million shares. Elaine has 9 or 10 million shares. Steve has got 12 million shares. So, the question is, how does that work out?
Tough one. That's the market, right? Let's see here. Thanks for taking the time to be with us. Et cetera, et cetera. The Barron's Roundtable I always look forward to. Tracking the U.S. dollar versus the run higher in Treasury yields. This correlation seems to be broken in the last 6 to 12 months. Can you give a brief comment on this macro correlation, if you have any insights?
The dollar versus U.S. interest rates?
Dollar down, rates up. Why is that happening?
There could be a couple of short-term dynamics that I'm not comfortable in answering, but I will. No, it's not. It's not. It's just that I don't think about it a lot, and that is the repatriation of funds.
Okay.
So you're taking euros, buying dollars. What does that mean? Your second part is if I'm in Singapore or I'm in Edinburgh and I'm Scotland, if I'm looking at where do I put my assets, am I starting to take some money off the table in the U.S., what does that do to the flow of funds? The German 10-year Bund is 0.5 it's not even 0.5%. It's a little over 0.5%. The 10-year Japanese bond is like 5 basis points. So the argument would be that in theory, money will continue to go into the 10-year U.S. bond at 273. Okay, but the 273 bond is more of a headwind for stocks. Mm-hmm. And I happen to not be the euro this morning is 124. The pound is around 142, 43. That means my companies that have earnings in Europe where the economies are strong I'm gonna have a huge positive tailwind, Keith, in the Q1, mm-hmm. just as I had in the fourth quarter, both on revenues as well as the impact of currency translation. Conversely, though, if I'm selling booze in the United States and I'm a French company like Pernod, that's a negative.
Yeah, it's tough.
Yeah. So you got to look at both sides.
Actually, we do have questions on the booze stocks here in the U.S. since we've been talking about
bottoms up. Yeah, I know.
Constellation or Brown-Forman, et cetera. How do I get long booze?
I think I would put together a spirits package. And buy a holiday package, and buy Pernod, buy Campari and Milan, which has Wild Turkey and has a couple of other like
Campari has Wild Turkey.
Grand Marnier, they just bought that. They have nice little niches. The stock is around €6.50. Pernod, Diageo. I have no problem with Constellation. I have no problem with Brown-Forman. The prices are high, but I think that's a good mix. In addition to that, I'd love to buy Suntory. Mutai in China is a little high. I've got an analyst in Shanghai that covers that area who is my beverage analyst in the U.S., so we do it globally. And there are a lot of that's distilled, that's what they call liquor.
Yeah, exactly.
Okay, then there's beer and there's soda, and I think you'll see another interesting dynamic occurring.
And you have a lot in your head. This one's on autos. I mean, Navistar going forward, given what's going on with post-VW investment.
Okay, Volkswagen bought about 18% of the company, around $20 or less, and they're putting all the synergies together. They're going to take their truck business even more public, and then they'll buy the balance of Navistar. So Navistar's got like 98 million shares, call it 100. The stock's around 43, down a couple of bucks today. The Class 8 market in the U.S. has turned around dramatically, okay? A shortage of drivers, but compensation will pay for that. Autonomous driving, that's down the road. So I like both PACCAR, which is 73 Ford this morning, and Navistar. The question for Navistar is when is Volkswagen going to buy it? I don't think that's derailed. I think they're going to spin off the truck business, the Class 8 market, and in Europe, and combine it with the U.S. and Latin America. It's a very interesting move on Volkswagen's part, as well as Navistar, which is extremely well managed. The annual report for Navistar that just came out really highlights everything they've done. I've never seen anything as detailed and as positive from a company that's had this turnaround. So Troy Clark at Navistar has done a great job. The annual report lays it all out. You got to look at Navistar. So keep trucking. I got to say it right.
How long's he been there? I mean, he's really turned that around.
4 years. 5 years.
Wow, because that thing used to be an absolute mess. USM, why won't the Carlson family listen to you and sell USM?
Step one, buy it all. They own 81% of U.S. Cellular. U.S. Cellular is selling at 38. It is a no-brainer. I do not understand why they can't pull the trigger. Okay, Ted is a Harvard Business School guy that gathers the information, and it's an easy decision. And I don't understand it, okay? They have a 5% interest in Los Angeles of a cellular license that Verizon will buy back. They have towers which they can monetize. There's no shortage of available funds at a low cost to buy into balance. So that they own, U.S. Cellular has, they'd have to buy about 20 million shares at $50, it's $1 billion. Get it out of the way and focus on growing the business. They're dabbling in broadband cable at TDS. I can't answer why they don't listen.
Wow, that's yeah.
By the way, I'm the CEO of a public company that competes with them, but in regional telephone.
That just means you know what you're talking about. Which
everyone,
it's self-evident to everyone who's watching.
If I knew what I was talking about,
Well, I promised I'd keep you here for half an hour, so I have to give you this might take half an hour to answer it, but this is going to be the last question. If you were the CEO of GE, would you do anything differently right now?
No. Flannery's going to do it.
You think so?
Yeah. I basically, start the ball all rolling. Look, This is not a small company.
No.
Okay, it's like 8.5 billion shares at 16, so you're talking still about $130 billion market cap. But the engine business is a crown jewel.
Yeah.
The guy that runs it, Joyce, is fabulous, and you have a bunch of other things that work. So 2 years from now, I think you look back and say he cleaned house and he's moving on, and that's what he was brought in to do.
Mm-hmm. Well, I mean, what do you think people have wrong on this guy?
I don't think they have anything wrong on him.
Really?
I don't think they have anything wrong on the stock. It's got problems. I mean, you got to look past the short-term speed bumps and say, what is it going to look like in 2020? So you got to have that kind of 2020 vision.
So you literally wouldn't do anything differently?
No.
Oh, that made the answer a lot shorter. Maybe.
But again, moving to Boston, Connecticut. What I would do is I would take the people in Connecticut that said we don't need GE, we don't need Aetna, we don't need United Technologies because they're not as important to the state. I would toss them into give me a river.
Sagatuck?
No, no. I like the Sagatuck people.
Too close to home?
Yeah, let's find another river.
No, I think it's because, I mean, your recent purchase of GE, a lot of people are interested in terms of.
I didn't buy enough of it. Look, the answer is if I buy 5 million shares, it's $80 million. Okay, I mean, I've got $200 million in Dr. Pepper that I'm going to get back. So what do I do with that money? And then how do I reinvest it when I got Exactech? And what other body parts do I buy? You play hockey. A lot of people play sports. At 85 years old, they're doing Taekwondo. They need new hips. They need new knees. So we are into the body part business.
I love it. You're the body part business. That's great. And GE too. So thank you very much for your time. Your memory and your amazingness.
Well, I made up those numbers anyway. Good.
Well, that's good. That's, at least you presented them with conviction.
You agree. I agree with that.
Thank you very much for your best
Always good to be here. 3 years from now, I'll come back.
Much appreciated. He's Mario Gabelli. I'm Keith McCullough. You can find me on Twitter. He's on Twitter very early in the morning, too.